The banking sector recorded broad-based growth in 2025. This morning, Absa Bank Uganda, one of the country's top lenders, released strong results, posting a handsome 25% increase in profit after tax. The bank's chief financial officer and executive director, Michael Segwaya, attributing the strong performance to higher customer balances, robust net interest income from government securities and other income streams.
Customers are trusting us to solution for their needs, whether it is trade and all the other things, which is a reflection of the increment in the non-funded income. We grew our loans by about 7%. I would have loved to grow better, but we also know the fact that in the last quarter, what we saw from our clients was a bit of cautiousness, care of what was coming up in January, the election, and most of them started planning post the election time to say, okay, let's invest, let's borrow, let's close down all these deals that are coming through.
What do you think would be your biggest external shocks in the next 12 months? And as Absa Bank, since you told us you're resilient and the bank is doing well, you're posting great numbers, how prepared are you to hedge against those shocks or risks going forward?
Staying disciplined, significant and aggressive portfolio monitoring, pretty much how we manage the risks around the announcements of the US withdrawal of aid last year. Making sure that you think about how that's going to affect your business, keeping in touch with your customers and seeing what's happening. Currently, for example, we've seen that customers in the OMC petroleum are seeing increased prices for fuel. So that means that we have to be in a position to avail more credit to enable them to do the same business that we're doing. That helps them manage the cash flow risk in their business. We're doing that also within strict guidelines and monitoring frameworks to ensure that the risks are seen and managed ahead of time.
Back to the bank's financial results, officials defended the rise in loan loss provisions, noting that overall income remained strong enough to absorb the impact.
Because of the base we are coming from, which is 5 billion to 8 billion, there was some significant, if you're to look at year on year. But in the bigger scheme of things, we are talking about 3 billion shillings against 2 trillion. So that's the perspective.
Furthermore, cybersecurity too remains a priority for the bank, for the board and management, particularly as banking becomes more digital and more interconnected. In today's environment, cyber threats can disrupt services, enable fraud, and compromise customer data. Weak cybersecurity can also facilitate fraud and basically, compromise the bank's resilience. For that reason, we continue to invest in strong governance and controls.
Officials here left the hall optimistic about the future, which is expected to be supported by increased infrastructure spending and oil sector investments. But the question, how will the industry sustain profitability while carefully navigating the current global market shocks, already causing higher input costs, a depreciation of the Uganda shilling and a slowdown in remittances, is a story for the emptier day. Musiime, NTV Tonight, Business.